One of my major recommendations in terms of a fixed asset control system is not to try and keep track of the very numerous, very small assets. Some people feel compelled to try and put a asset tag on almost everything that they have ever bought that's going to last for more than 1 year. My recommendation is that it's better to charge off small items as acquired, charge it off to expense. Don't try to keep track of it in the future. Keep the fixed asset record for the major items that are really important. Many companies have used in the past a $500 minimum capitalization. If you use something at that level, you're going to find yourself with hundreds or thousands or tens of thousands of line items in your fixed asset record, items which are then very hard to control. There are companies now, and there's been a recent survey that suggests that maybe moving up to $2,500 or even $5,000 as the minimum capitalization level gives you actually better control. Don't worry about the pennies, worry about the dollars. And if you have a $2,500 or $5,000 minimum capitalization level, you're going to have far fewer items in your fixed asset record. But then it's not an impossible task to try and locate those items once a year or once every 2 years when you take a physical inventory. When you have literally tens of thousands of items in your fixed asset record, it is a monumental task to try and identify where those are and reconcile what's on the shop floor with what's on the fixed asset record. It becomes an overwhelming task. Because it's an overwhelming task, companies are very reluctant to undertake a physical inventory. And in terms of how your internal auditors or your external auditors insist on a periodic inventory, it's all too easy to postpone it from 1 year to the next. The argument being, well, it was okay last year, it should be okay this year. And then next year the same. So you end up not taking a physical inventory. And while many people may not realize this, the Foreign Corrupt Practices Act actually requires company periodically to take inventory of their assets. Just as in an annual audit, the auditors check the accounts receivable and check the inventory of goods and work in process, finished goods and raw materials. You're supposed to take an inventory of your fixed assets. Most companies do not do it, not that they are consciously avoiding it, but it's just too much work. And if you looked at only the items over $2,500 to $5,000, it's going to be a lot easier to find the assets and a lot easier to reconcile what is there with what's supposed to be there.